Hey, what's up, everybody? Welcome back to Passive Money. This is Kirby right here. That's Alex over there. Okay, I got it right this time. Today we're going to talk about has the market bottomed? That's a question I got last week. I believe it's a short out there telling people don't call me because they only want to be in the market when they think they can time the market. But with that all being said, Alex, take it away. I got a lot to say, but I don't want to say too much.
All right. Well, I mean, as avid as I am with stocks, more than real estate, um, I still am learning a lot. I think there's a lot to learn with stock market, and studying history is big. But from the looks of it, just how the S&P 500 has been trending, it looks like we've reached the bottom. And considering that the stock market trades on futures, and if we're considered to be in a technical recession right now, we can look at history and see that during recessions, the market tends to go up. I would believe the market has reached its bottom. That's my take on it. I don't know if you're seeing it different, but that's how I'm viewing it right now.
For me, I say it don't matter. I say it don't matter if it's bottomed or not. And the reason why I say it don't matter is because we talk about long-term investment and passive investment. All right, so let's share the screens here. All right, can you see the screen?
Yep.
All right, so let's go with this right here. All right, so this is the S&P 500 all along. So this is where we at. So back here in the mid-June area, mid-June time, you saw the market hit the oversold condition, and then we bounced up. And then we got up here to this resistance line here around that 432 area. And this is the S&P 500. We're using the S&P ETF to show it. But then it bent down. And if you remember in the class that we had last week, Alex, we was talking about how the market's being close to overbought, and then we're close to here, so expect some rollover. So we got some rollover going. And the reason why I say it don't matter, and this line here is just the last top over here. This red line here is the last top. So the first line I've been looking at on the downside is the 415 area. But the reason why I say it don't matter, because we're not traders. Of course, we sell options. We don't buy them, we sell options. But what I mean by we're not traders is we're not sitting here trying to time the market, to build a network based on off timing the market. What we are long term, we want the charts to go like this from bottom left to upper right, and we just get into positions, hold it for the long term, and then we make some premium on the other side. The reason why I'm saying it don't matter is if it's bottom or not, is because this right here, this price right here is at a bigger discount than we had back in March of 2022. Is really at a bigger discount than we had back in December of 2022. So if we just playing the game of buying into the market, holding it for a long term, and then we're going to, build positions over time, dollar cost averaging, and we'll talk about that in another video. Where the market's at today don't matter, because we know in the future the market will be higher. So if has the market bottom, I really don't care if it did or not. I just want a better price, or a deeper price, a deeper discount than we was getting back here in the April timeframe or the March timeframe, especially in the December timeframe. So now we sitting back here at the same price level that we had back in June and July of 2021. We sitting right there and probably going a little bit lower, but it's at a better discount. And I'm always looking at the future. So I'm going to find companies at a deep discount, and I'm just going to keep buying the properties over and over and over again. So, and that's why I had the video where I said the short where people was calling me, asking me, hey, should I get in now? Should I get in now? Every time for me is a good time, especially especially on your age frame. If you're in your 20s, worried about, has the market bottomed? I'm not a market timer. What I am is I know the market will be higher in the future than it is today. So it's a good time to invest. And that's how I look at it. So Let me stop the sharing. So you just...
Oh, no. Oh, can you go back to it actually? because I wanted to
Yeah,
show
sure.
the viewers.
Sure. Let me go back to it. Now you asking me to think on the fly. All right, here we go. All right, go ahead.
Zoom back a little bit to COVID times. I just want people to see this. So, like, look at the top, right before COVID, right before it dropped. Look at where we are
Hmm.
now. Even the bottom is above that point. And so, like, as you were saying, like, I mean, I was just giving the answer to what people were asking, but you're absolutely right. It doesn't matter because you can look at the all-time high back here before COVID hit, and the bottom over here is still above that price point. So even if you bought at the all-time high before COVID, you're still at a better buying point than you were at the bottom right now. And so, I mean, and you see this even when you go back all the way to 2008 and everything. I mean, the S&P 500 has continued to just go up and up and up over the past, what is it, over nearly 100 years. Um, so it anytime, like you said, is good to invest. Even buying at the, let's see, that high point at before 2008 was at 159, is that? And so
155. Yeah,
155.
159. Yep. Yep,
So
you're right.
from the all-time high there, let's just say people were buying at the all-time high. You fast forward what, 14 years, and it's more than doubled at an all-time high. So I mean, the key in investing long term is consistently buying. And of course, you want to buy when there are dips like that and take advantage. But as long as you're just maintaining a consistent buy, you're gonna see results in the long term.
Yep, I agree with you 100%.
Yep.
But yeah, so and that's the mindset that people need, because everybody, like we always talk about microwave society, everybody want instant gains, instant profits, instant everything. The people that's been in the game for a long time, they're long-term players. I mean, Charlie Mungers, the Warren Buffetts. Um, you can go to the long shorts, the Einhorns. You can go to a lot of them. A lot of people that you see that put out those uh investment statements of what they held for the past 3 months or last quarter, it shows a lot of it. And they getting in positions where they believe that it's an attractive price. They're not getting in position where they're like, oh, I believe this is the bottom. They're getting in at attractive valuations and then riding it for the long term. Vogel, like the Vanguard mutual funds, they are based off of long-term investing. The long-term investor is the ones that win in this game. I mean, you're going to get that 0.001% that can time the market. You're gonna get those. There's gonna be people out there that can do it. But for the most people, because they use things like emotion, they don't have the platforms and technology that these big hedge funds have. They don't have all these quant strategies and things like that. You can't time as they can. They spend a lot of money on the ability to time the market. For the normal, regular, everyday person, they have to get in the market and look at the long term. And the long term is where you win at. If you play the short term game, you're gonna be a net loser. I mean, I hear people all the time come to me talking about what options are you buying, uh what stocks are you buying, and when you think it's a good time to get in and get out. The answer is I don't know. Only thing I do is buy good companies at a very attractive valuations and hold them for the long term. Of course, we sell options on top of it to bring in the weekly and monthly income. But besides that, that's all we do. We don't go out there trying to time the market. You're not going to hear us say that, oh, this is the next hot stock out there that you should play it on the long term or play it for a trade or something like that. 'Cause that's just not what we do.
Right.
So that's
Yeah.
how I look at it.
When people are trying to time the market like that, and people are trying to look and find that like right buy point, eh, that's a very short term mentality. Like, you'll never see us on this channel talking about making quick returns so that we can just blow money. Like, it's always about growing our portfolio and building wealth. And the goal would be to create generational wealth for your family. And so, to try and time the market, what is your goal in the end? Is it to sell once it comes up, and then do what with the money? And that's something that people have to ask for themselves, is what are their goals when they're investing in anything really.
I agree with you 100%. And with that all being said, please like, comment, and share this video. If you believe time in the market is the way to go, please comment down below. We'd love to hear your your comments or suggestions. Also, if you don't mind sharing with me or us your portfolio to show how well you're doing at it, I would love to see it. And I need to see a long-term, I need to see long-term how you're doing with it. I don't want to hear about one trade you did 1973 that netted you $10,000 and that was the only trade you got. And that's really how I look at it. I mean, yeah, everybody can have a good trade. I've had good trades where I got in at the right price and got out at the right price. But in the long term, every time I've tried it, it's mostly bad than good. Even with buying options, most people are not net winner on options. Most people. I mean, you might have some outliers out there, and to the outliers that's out there that can beat on options all the time. Congratulations on you. Congratulations to you. Excuse me. But for the most part, for the normal everyday person who has a job that can't stare at the market all day, long-term investing is the way to go. And looking for a bottom is a it's a bad idea, because the first thing that's going to happen is everybody wants to know when the bottom is, when the stock market is up, like, oh, I can't wait till the bottom come again. But when the stock market start rolling over like we had last week, now everybody's fearful to even touch the market. So just get into the market and just keep staying in the market. That's what's going to get you there. Because me, I was a net buyer this past week, and I continue to be a net buyer every dip that we have. But I'm not buying saying, oh, this is the bottom. I'm buying it at an attractive price to grow in the long term to benefit myself and my family. But again, put your comments down below. The good, the bad, and the ugly, we want them all. So with that, y'all have a good one. See you in the next video.
See you guys.